When I think about my current discipline that I have as a trader, I think about three things in my life as I progressed growing up that really contributed the most significantly to it. The first was I had a very long leash growing up in terms of trust from my parents. I'm a middle child, so my brother took the brunt end of it, and then by the time I came along, my parents were a little bit more used to the parenting thing. But when I was growing up, middle school, high school, my mom would always give me the option to stay home from school if I needed a mental day. And that was just always on the table. But it was up to me to be responsible for my work and know, well, I can't stay home today because I'm not going to be able to keep up with the project that's due next week. So always having that ability to say, I could manage myself and say, I can stay home today if I want to. I didn't have to pretend to be sick or anything like that. Also, in terms of growing up, my parents were well aware that in high school, people drink beer, and that's going to happen. So rather than try and squash me and prevent that from happening as much as they could, they gave me a leash. They said, if you're going to go out and go to a party, either stay out overnight or give us a call to come pick you up. And again, that allowed me to prepare. And by the time I got to college, where everybody else was going buck wild and experimenting, I had already gone through that process, and I was able to focus on school. And my first year in college, my roommate was close to flunking out with a 1.3 GPA or something like that. And I was doing the best that I have ever done in my life in schooling with a 3.8 or something like that. So it allowed me to prepare earlier by having that long a leash to have that trust and discipline to manage myself in pretty much every aspect of life. Another factor is sports. Growing up, playing baseball and football, every sport that I played, it was always hustle. And that's something that my dad burned into my brain where, if you're going from point A to point B, jog, and you stand out, the fact that you're making that extra effort compared to everybody else. And so with my trading, I'm up before the sun. I'm putting more hours in than the vast majority of people. That allows me to be better as a trader than most people, in my opinion. So having the discipline to have that work ethic started very early on in playing sports. And the third thing would be being a farmer. So when I was a farmer in Maine, full-time for a season, again, waking up every single day at 5:30, being out the door at 5:45, and in the fields doing work. And that work ethic, I've never worked harder in my entire life, and I don't think I'll ever work that hard again because it was probably unsustainable physically. But just an example, we had a greenhouse, and we're up in Maine, so in the middle of the winter, it's freezing, and we had a wood stove inside the greenhouse to keep it warm so that the plants and the sprouts would be able to survive and get a head start on the spring. So every night we would, stoke the fire and load it up. But by the time we got out there every morning, the fire would be dead and it would be chilly in the greenhouse. So I just volunteered and said, well, I'll go out and fill it in the middle of the night. So the other apprentice and myself would switch off. But every night I'd wake up at 2 or 3 in the morning and walk across the field through the snow out to the greenhouse to add wood to the fire, and that just became part of the routine. So it wasn't easy, it was very hard work, but again, just that discipline and that drive to always be moving forward, even just walking from point A to point B. And that's where, the sports came into play, where I learned to hustle from point A to point B. As I was farming and walking from one field to the other, I would be hustling, and that's time that you save, and it adds up. If you do that, make that same walk 5 times a day for 5 months, you end up saving hours by just walking a little bit faster and putting a little bit of hustle in your step. So discipline is something that I've always been developing and have always had as a part of my life. So applying that to trading has been fairly easy. So psychology has always been something that has fascinated me. I took my first psychology class as a senior in high school, and that really sparked my interest learning about Freud and Jung and all of those old school psychologists. And then as I got into college, one of my favorite classes that I took as I was a business management major was industrial psychology. And just that whole fascinating interaction with workers and motivation and compensation and just that psychological mindset. So I have always been interested in psychology, even down the path to lucid dreaming. That has a lot to do with psychology as well. So with that, I take that base knowledge I have of the subject through multiple courses. And again, I suggest reading about psychology and reading some intro 101 books to get a better understanding of it, because it absolutely relates to the market as a whole. And from there, it just goes to logic. So an example would be Tesla this previous week. And Tesla announced that they have a news announcement coming on, let's say, I forget what day it was, Wednesday after hours. So that means on Tuesday, the bulls are buying because they're anticipating news on Wednesday. On Wednesday, the bulls are buying, and we closed up at the high of the day on Wednesday. So at that point, I had just gotten back and I was keeping an eye on Tesla, back to the computer looking to trade. And I said, all right, Tesla's closing near the high of the day. If I am looking at logic, that would say to me a strong close is going to have us looking at the announcement coming at 5 p.m. Market closes at 4 p.m. So if I get in at 3:30 into this strength, and I'm going to be looking for after hours continuation in leading up into 5 p.m. Eastern. And the bulls can push the price easier in extended hours because it's a lot less, it's a lot more thinly traded, and a little bit of capital goes a long way for moving the price around in extended hours. So we closed strong. I entered my position. We saw multiple dollars of upside in extended hours, and then I sold before the announcement because at that point, it's a complete gamble whether it's going to be a bullish or bearish reaction, and the odds probably favor a bearish reaction because the market is pricing in the news. So it's logic in the sense that once you're familiar with how the market works and you watch it work for a few years, you can get very comfortable knowing when an event is a most likely a sell the news event, when you gauge has the market had ample time to price in a known event, and then that's where playing as a contrarian comes into play. Because you look in the opposing direction, even though it's supposed to be good news, you know that that good news has been priced in for 2 days and we're likely going to pull back. So I sold at about 4:40 before the announcement at 5, and then as soon as the announcement comes out, the price dumped because the news had already been priced in at that point and it wasn't very significant. Other than that, I put myself in both positions. Whenever I'm analyzing a chart, I imagine, what would I be thinking if I'm bullish and what would I be thinking if I'm bearish? And that can help me if I'm in a bullish standpoint. That can say to myself, okay, well, if we break this resistance, that's going to be bullish because if I were short, I would absolutely cover on that resistance breaking. And that helps put me in the opposing mindset to know on every setup, what both sides are thinking. And I put myself in that scenario. So that's why it's important to, even if you only trade bullish, to practice and be aware of what the opposing side is doing, because you want to get in your head. I mean, technically they're the enemy on whatever trade you're looking at. The opposing direction is the enemy, and you want to be the enemy's best friend in terms of knowing exactly what they're thinking, perhaps getting a step up on what they will do in certain scenarios, and that helps you, again, get into the psychology of the market and determine what are most likely scenarios. So I did find a mentor in my early starting of technical analysis back on Investors Hub, and it's a forum that's, again, vast majority clowns that you want to avoid because it's really bad information and a lot of groupthink and a lot of pumping, but there are some gems on there. And this was just a person that I would see on the boards on different companies, and I would see that he was more right than everybody else, and I wanted to know how that was. So obviously he was using charts. He started his own page, and I was the first follower on that page because I pretty much said, all right, I want to know exactly what you're doing because clearly you're doing something right. So I would just ask him questions, and he was very generous with his time in regards to answering my questions as I asked them. That being said, it was also, very hands-off in the sense that it was a lot up to me on my own to find information. And that's where discipline and, drive comes into play. So it would be the kind of thing where I could see that RSI was important to him. He would explain how he uses RSI, but it was almost like he would point to concepts, and then from there, I would dive down the rabbit hole of that individual concept before I'd say, okay, I have a firm grasp of this, now on to the next topic. So I would learn about RSI, and then I would go to 8 different sources and read articles about it and watch videos about it, see how other traders were using it, go back and look at historical charts and see how it played out in the past. And those were all things that I did on my own. So while he was awesome for keeping things organized and for keeping me on the right path, he would point to the path, and then it was up to me to walk down the path on my own to gather that information. So our relationship definitely was very friendly, and we talked to each other consistently for probably a couple years, and he would definitely fall into the category of do good things with his mindset. He was a bit of an entrepreneur as well, and again, definitely owe the early stages of having the confidence and the drive, and someone saying, yes, this works, this is how it works, and you can learn it too. And that was a big motivator for me early on. So one of the most common themes of questions that I get is about small accounts. And that's because a lot of people are starting with small accounts and they want to know how they can best trade, because my style right now is trading with a large account and scalp trading, and that's not the best strategy for a small account. So these questions were, at what threshold did I start transitioning to day trading, from swing trading to day trading? And that was the $25,000 level where, I could then legally be day trading and not have to worry about all these regulations that are in place. So getting over $25,000 and $30,000 is when I started day trading. My story is the pretty much, ideal scenario, home run story that is not common. And that's why, we don't advertise in terms of showing percentage gains and saying, look what we can do, you can do it as well, because it's not likely that people are going to be able to have that kind of success from starting with, single or four-digit account and taking it significantly higher over that time period. I'm very fortunate to have lucked out into some very bullish markets. That being said, there's commonly in the last 8 years, there are these hype raging bull markets that are so easy to make money in. All you have to do is be prepared and be ready and just be able to deploy your capital in that market. So I continually, I say this many times, but my strategy is playing conservative until a hype market comes around and then smashing that hype market with everything you have, because you know it's not going to last. And we had 2013, USMJ stocks ran wild. We had 2016, Canadian MJ stocks ran wild. 2017, cryptocurrency was insane. 2018, Canadian MJ stocks ran wild again. We know for a fact that US MJ stocks are going to run wild. We just don't know when. It's a regulatory issue that has to do with politics, so that might delay things. But what I would be doing is, number one, with a small account, swing trading and playing into that momentum. And if you're looking at a name just like a Canadian US example or a Canadian MJ example, would be VFF. And if you were trading VFF and using the hourly uptrend as your guide and swing trading it on this blue sky breakout run, you'd be making 100%. So it's being aggressive with my capital. I would utilize, all-in positions in very high probability scenarios, like, closes at the high of the day in blue sky breakout, or seasonality. Back in MJ sector 2010 through 2014, there would be seasonality where we know that in the fall into the new year, there's going to be a bullish market environment. And then I would stop trading when we're not in that environment, because I don't want to give back my capital. So what I would be saying to people who want to, succeed with a small account is learn. Preserve your capital while you're learning. If you are draining your capital and trying to trade and using too big positions and doing it too actively and giving away your money, you're obviously going in the wrong direction. If you're learning and going break even in, a market where it's not a raging bull hype market, you're way ahead of the game, because you are now having the experience, and that's going to allow you to act on the next hype market. So I didn't know anything about cryptocurrency a week, 2 weeks before I started trading it. And because I had confidence in technical analysis and charts, and I was prepared to deploy my capital, I was able to act on that opportunity. So while we're waiting for USMJ to explode, like we know it's going to, with billions of dollars waiting on the sideline, accrue capital, work odd jobs, do everything that you can to build your stack and learn at the same time. Learn about trends. Again, you don't have to be actively trading and feel like you're wasting your time, because everything can change in a 3-month span, and you can make no money while learning. And then if we have a crazy bull market that goes, 200% over 4 months, you just made 200% in 4 months, and that makes up for the period of stagnant activity where you were just learning. That doesn't matter, because you just made significant amounts in a short amount of time. So I would be using swing trading strategy with smaller accounts, and you'd be using daily levels for my stops. I would ensure that I am trading in a bullish environment, because if I'm trying to swing trade when we're in uncertainty or when we're in a downtrend, I'm obviously going to be losing. Also, options trading. So I proved to myself with a small account with $2,000 that I could consistently make money with options. And that was just an experiment for myself. I had just started TheChartGuys. My results as a trader were being negatively affected by my live streaming and my answering questions all day. And obviously I didn't like that. That didn't sit well with me. I stopped trading, because the last thing I want to do is trade in an unfavorable environment and just slowly dwindle away my funds. So I stopped trading and I started practicing, and I started to use small accounts, $2,000 with options, and then just take day trades and scalp and see what can I do with $2,000 day trading options. and I was able to see 100 to 200% gains 3 months in a row trading that strategy. So I proved consistency to myself, I built up my confidence, and that told me, all right, now I can successfully trade while I'm doing all this chart guys stuff at the same time. And that allowed me to, again, it was very empowering to know that I've got it figured out, I've got the consistency, I just proved it to myself. And what I was doing is tracking every single trade, my entry, my stop loss, my target, and then notes about the trade. And I would go back and review every single trade and continue to work from there. So in hindsight, US penny stocks had great seasonality. That's really not the case anymore, so that's a completely different environment. Learning options, it's very difficult. You're probably going to lose to start. I lost thousands of dollars when I started trading options because I thought, I know how technical analysis and charts works. I can trade options. That's not the case. So once I got my butt handed to me and realized I didn't know what I was doing, that's when I scaled way back, smaller positions, and then proved it to myself that I did know what I was doing. So if you have the discipline and the ability to learn options consistently with a small account, it's a great way. It's penny stocks on steroids. And the best part about it is there is an opportunity every single day with options, whereas in the penny stock world and small caps, it was very seasonal, and pretty much from March through August, you couldn't trade it bullish. So, I mean, that pretty much told me that if I want to be able to do this consistency long term, I need to find a more stable market that I can trade year round. Because if my source of income is gone for half the year, what am I doing? That's obviously not a position to be in. So, just to summarize, small accounts, you're swing trading and you're waiting to be aggressive in bull markets. When it's not a raging bull market, do not be aggressive or you're going to give away those funds. Continue to compile capital. I won poker tournaments, I was flipping paintings on eBay, I was doing yard work for $15 an hour, which is a pretty nice salary at that point for yard work back in the day. But I was painting, I was mowing lawns, and I was just adding that money to my stock account and waiting. And right now, that's exactly what I would be doing, and it's exactly what I am doing, waiting for the USMJ market to be the next one to pop off sometime in the next 3 years, in my opinion. So that is what I would be doing with a small account, learning, not losing capital while learning, and waiting for that next type market. And crypto is probably going to do it again as well. We know the crypto market's going to turn around eventually. Maybe it's not going to go 10,000% again, but if it goes 200%, again, that's a major opportunity. If you get 100% gain, in your account on that hype run, you just outpaced everybody else for that year that's trading, in the broader market pretty much. So it doesn't take consistent gains all year. Yeah, that's nice. And once you get to a point where you have larger capital, you can get those consistent gains all year. But that little burst in that 2 to 3 month span when it comes can be enough to make up for the entire year if you get that timing right and are able to confidently act on it. So the most common characteristics of traders that I have observed in the chat room are they are disciplined, they have a great work ethic, and they hustle. They are usually successful in some other aspect of life. Tons of successful traders are coming off of being, having a successful business, being entrepreneurs. And I think that has a lot to do with, number one, confidence in yourself. Number two, comfortability in finances. If you have a secondary source of income, you're a lot more comfortable. There's a lot less stress. It can be a fun game as opposed to this thing that you have to do or you're going to be out on the streets. And that is a significant game changer in terms of where you are at psychologically as you are trading. And again, if I were in the same spot that I'm at now and having to provide for my family only with trading as my source of income, I probably wouldn't be a trader. And the reason for that is it would not be fun for me. It would be a source of stress. Right now, every single day, trading is a source of fun. It's a game. It's a video game with numbers and, points as your reward system. That's how I view it. And if I were worried about, my son's health expenses and my wife retirement and things like that, it would be a completely different psychological standpoint of where I'm at. Something else is having a system of rules and sticking to it. There are so many times where I will hit my target for the day in the first 45 minutes of trading, and then I say I'm done for the day. And when I say I'm done for the day, that means I'm done for the day. And there will be so many times where people will ask me, hey, are you watching this setup? Are you looking to make this play? And the answer is, without even looking at the chart, no, because I'm done for the day. So having that system in place, and again, that goes back to discipline as well. Another thing is actively engaged. The people that are actively engaged, I cannot tell you how far advanced you get with your education when that is the case. And I'm a perfect example where the trader that I was before starting the chart guys, I am 3 times that trader right now. And the reason for that is explaining myself and talking about things and getting outside of my head. There's so many times where I'll answer someone's question and I'll say, oh wow, I never even thought of that in terms of why I did something. And I cannot stress enough for you to teach someone else, for you to emulate me. If I'm your mentor and you're watching and learning from me, look at a chart, hit record and say, if I were Dan, how would I be analyzing this chart? And that's what I did with my mentor when I was starting. I would write paragraphs because we weren't doing videos or anything. It was just a chart. I would write 2 paragraphs, exactly what he would say if he were looking at this chart. And that was the biggest leap forward that I took for my own independence and confidence as an analyst. And I cannot stress enough, teaching someone else, actively engaging and talking about it with other people, and again, getting outside of your mind and putting those thoughts and processes into words is a great learning experience that, in my opinion, is the fastest, steepest part of the learning curve that you can overcome if you are doing that. So obviously risk management is essential as traders because we want to always ensure that we're taking 3 steps forward and only 1 step back. And if we're taking too big of a risk, if one bad trade can erase 15 good trades, that's obviously going to keep us stuck in the mud and keep us from progressing forward. So throughout my whole trading career, it's changed in terms of how much I risk on a trade. Back when I was using smaller accounts and swing trading, my risk and reward levels would be higher than they currently are. Where I'm trading right now, my standard day trade position can be anywhere from 10 to 20% of my actual total account. And when I'm really confident in a trade, which usually only happens in oversold bounces, that's when I can get upwards of 50% of my account in a trade. That hasn't happened in a while, but back when the MJ space was seeing daily oversold bounces or 4-hour oversold bounces, that's when I would scale in, 10% of my account, 10%, 10%, and build that position looking for that eventual bounce to play out. So these days, the maximum risk, that's the position size. Obviously, I'm not risking that entire position size. Really, a day maker is 0.15% of my account, and a day loser would be the same. And the most significant losses that I'll take would be a 1% loss of my account. That hasn't happened in a long time, but I would see, probably my biggest losses of 2018 would probably be around that 1% mark. And even the biggest gains, 2% of my account would probably be some of my biggest gains, although there were some days mixed in there with bigger amounts. So overall, keeping those levels really small, both for wins and losses, and just ensuring that I have more wins than losses and that I let my wins ride a little bit longer than I let my losses ride, ensures that my risk management is in place. And again, for every single trade, you want to be calculating, what is the risk before I get stopped out of this trade, and what is the reward of what my potential target is. So some things that I wish I knew earlier in my trading career, first would be utilizing stop losses for far too long. Again, like I just said, there would be times where I would give back 2 weeks of profits with 1 loss that I just wouldn't exit, and it would just get worse and worse, and I'd wait for the bounce and it would never come, and I'd get the sinking feeling in my stomach. So knowing to put a cap on the absolute maximum that I can lose on a trade, and knowing what that number is before I ever get into the trade, was a game changer for me that I didn't really discover until later in my career. And the reason for that is trading penny stocks. A lot of brokers don't allow stop losses on over-the-counter companies, which again made it even more difficult to trade in that environment. I say another thing that was most significant for me was trading with a team. I didn't realize that you could trade with a team in terms of real-time live action. Like I said, I was using forums to start off, and forums are a lot slower a means of communication. And then we started to make some chat rooms and invite people in that were like-minded and were on the same page in terms of looking at the same sector and looking for the same setups. And we were just combining our eyes on the market and working as a team and pointing things out to each other. And that was a big awakening for me, realizing, you know, if you play this game with a team, you have an advantage than if you play this game by yourself. So unfortunately, I don't have any long-term hot picks here. I don't really have any long-term holdings. I've got one U.S. marijuana company, IAN. TheChartGuys has an account in cryptocurrency from payments we've received. We sold those in the 6,000 bear break. We rebought them in the 3,000 area where we've been bouncing around recently. But aside from that, I don't trust our financial institutions and I don't trust our government. So I'm not going to have any long-term portfolios if I don't trust the institutions that, you know, that bet is going to be based on. I right now am most comfortable in the dollar, US dollar, and I am well aware that the dollar could collapse. I don't have any implication that that's going to be happening anytime soon, but I do have a contingency plan in place that I will diversify assets, whether it's through gold, whether it's through cryptocurrency, but moving away from the dollar and into those other assets if, you know, worst case scenario were to happen. Aside from that, I'm looking into land. I want to be able to self-sustain on land, not only for the investment in the property that will, you know, obviously take place, but I want well water. I want a seed saving schedule that I'm on. I want to be, you know, producing my own food and preserving that food. And I want to have perennials and animals. And in my opinion, that is the best long-term investment that you can possibly make. And being able to sustain yourself off of the land is a skill that is invaluable in my opinion. So in terms of investment, that's where I'm leaning towards, and I've been scouting for the last 6 months at this point, waiting for the place to come along that really speaks to me, and that hasn't happened yet. So I'm being very patient with it, but looking to build a small community, looking to have multiple living structures out there, and probably going to have some kind of trading, farming community for some point in time. And I'll keep you all posted on when that gets going. Certainly looking forward to creating content around that. But again, I'm not rushing anything. I'm waiting for the right place to come along. And 6 months into the search, that has not happened yet. So my first 2 years as a day trader obviously had a lot of ups and downs, keeping in mind that I was coming off of being a successful swing trader for a few years before that. So I did have some confidence, and I was, you know, technically savvy enough to know that I could utilize technical analysis to profit, but it took a lot of a learning curve in that regard. With regard to courses, would I take a course? Absolutely, if it were from the right source. And you know, the technical analysis, or trading I should say, environment that we currently have with, you know, these mentors and courses, it's really the Wild West, and it's a shame because it's souring a lot of people's experience with trading. You know, there's so many people that are scam artists out there just saying, you know, follow my picks, I'm going to make you 500%. And unfortunately, the people that want things handed to them are the biggest suckers that are giving away their money and getting nothing in return. You know, if I'm looking for an education, it's going to be very clear very quickly, this person doesn't know what they're talking about, they're not teaching me anything. Whereas opposed to, you know, if I'm saying, just give me these picks, I want easy money, that is making yourself very susceptible to all of the scam artists that are out there. So it's unfortunate that a lot of these people are ruining trading. You know, my first experience with trading is following somebody's picks who doesn't know what they're talking about, and they just took my $500 for my annual subscription, and now I'm going to be extremely distrustful of not only that individual, but technical analysis as a whole. And I'm going to say, he can't make money trading. This guy just completely lied to me, and all I did was lose money. So if I trusted the person, and if they had proven to me that they know what they're talking about, then absolutely a course would be a great way to start. And that's comparable to having my mentor, you know, my mentor pointing and saying, you know, head down that path and learn about that. That's what a course can do. Obviously the course, unless it's, you know, 50 hours long and very, very in-depth, is not going to give you everything you need to know. It's going to give you a great foundation, and you're going to say, okay, well, this course talked a little bit about this, you know, aspect of trading, and I want a little bit more information on that. So I'm going to go down that rabbit hole, and I'm going to explore this specific topic very organized and honed in and master that a little bit more, and then I'll move on to the next one. So it's a great starting point if it's a trustworthy source. I personally would prefer chat rooms, and again, the whole teamwork aspect of things, having someone in real time that I can ask questions to and confirm, are you seeing the same thing I'm seeing? And if they're not seeing the same thing, that's oftentimes when I would learn the most. That would tell me, wow, I wasn't even considering this time frame. I need to zoom out and get the bigger picture to establish my trading game plan. So bottom line is, trading, a lot of ups and downs to start, and getting the consistency down and the confidence was essential. The biggest thing that I had in terms of speeding up that curve was getting out of my head, putting things into words, into writing stuff down, actual trade game plans, or recording things. And again, teaching other people the basics solidified my understanding of the basics so significantly. I cannot stress enough how starting the Chart Guys completely transformed myself as a trader, because I was getting out of my head and putting everything in very tangible words that I could then, apply. So just an example is, I just recently made a video for members talking about the criteria for whether something is a bull flag or a bear flag. If I'm trading by myself and I'm not making content and I'm not getting out of my head, I'm not going to have that clear rule set laid out. But because I'm trying to convey this information to other people, and I'm saying, okay, when I'm looking inside my brain at what's going on, when I'm analyzing whether something's a flag or not, these are the criteria. And then I write down the criteria. Is it still holding this exponential moving average? Has it given back this percentage or more of the move? And it's just a checklist. And if the answer is, yes, then it's still a bull flag. And if not, then maybe it's not still a bull flag. But just having it that clear and tangible makes all the difference in the world, as opposed to me just saying, well, it kind of looks like a bull flag, and that being as in-depth as I go in terms of digging into exactly what's going on and exactly what I'm analyzing when I'm looking at that setup. So as far as the question is, how long did it take to consistently be profitable? It really depends on what you mean by that. So I've been consistently profitable since, I first started, in the sense that every year is a green year. I think I might have had one red year mixed in there when I was traveling and not really trading, but for the most part, every single year has been a green year. So, you can say on a large scale, by an annual basis, 8 years of consistency. Or if you want to know, how long did it take till I was consistent with swing trading, that probably took a year into the game. How long until I was consistent day trading? That probably took, a little over a year of fully day trading before I got that down. But in terms of how long until I've been completely 100% confident that I can do this for the rest of my life, and that, every week that I'm going to be able to have 3 or 4 green days in that week, that has probably been in the last 2 years of trading once I got capital. And again, it's so very clear how easy it is to make money once you have money in this market. That's just the way that it's designed. It's intentional in my opinion. And it's so very clear that if you have significant capital and all you need to do is just these little scalp trades, how easy is it to capitalize on a 20-cent swing on Cron and be right for a 20-cent direction? And if I'm trading with $10,000, that 20-cent swing is going to get me, maybe $100 or so. But if I'm trading with $300,000, that 20-cent swing is going to get me, $4 grand in a day. So it's completely based, my confidence and consistency increased. You could graph it. Confidence and consistency and account size, absolutely very correlated to each other. So what is the end game? Why am I still doing this? And where do I go from here? So that's a good question. And that's a question that I commonly get from skeptics saying, if you're successful and you're making money, why are you still doing this? Why aren't you going around traveling? The answer is very simple, that I love what I'm doing. And obviously at this point, you can very clearly see that. We put out 6,500 videos in the last 3.5 years. And obviously the consistency where I am traveling, I'm putting out videos daily while I'm in Iceland, while I'm in Puerto Rico, while I'm in New Orleans, while I'm traveling everywhere, I'm still putting out daily videos. And it's not because I have to, it's because I want to. And the biggest factor in that is the reaction and the communication with everybody out there in the community. So the fact that I'm getting positive feedback and the fact that people are saying that it's helpful keeps me so motivated and driven to keep putting out this information, because it's something that I love and it's something that is helping people. So, I mean, you can't have any better synergy of what you're doing in your life and feel any more fulfilled than doing something you like and having it leave a positive impact. So my end game is, like I said, animal sanctuary, farm, self-sustainability, but I will always have some form of financial markets incorporated in my life, whether it's helping people navigate them or whether it's, you know, a farmer trader community, things along that line. I'm always going to be putting out content. And it's just, I've never had a day in 3.5 years of the Chart Guys where I've woken up in the morning and thought, I don't want to do this today. And I cannot, like, it's astounding to me at this point. But you can ask Jason, Chart Guys Jason, my business partner, how many times in the last 3 years I've given him the heads up, like, hey, you know, I'm probably going to be done doing this soon in terms of the amount of time I'm putting in, and, you know, I don't know if I'm going to be reaching burnout soon. I assume I'm going to, and I just keep astounding myself with the fact that, nope, still want to keep doing this, still going strong, still want to put out videos every day, and there is just this drive that is hard to describe in terms of motivation.